Good afternoon and good evening. This is Sir Abil Ahmed from Abil School of Accountancy, your ATX lecturer. We are starting ATX. Previous name is P6. And the course which I'm going to teach you, inshallah, that is ATX UK variant. The variant is UK. Okay. Let me explain you a few things relating to ATX. Number one, the paper pattern. Second, which finance act actually we are going to discuss. And third, what will be the way of teaching, okay, and how you are going to get the benefit. So let's see. Paper pattern is very simple. Section A, we have one question, number one, 35 marks. Question 2, 25 marks. So section A is of 60 marks. When it comes to section B, question 2, 20 marks. Question 3, 20 marks. Question 4, 20 marks. So this is simply a paper pattern. Section A gives you 60 marks, section B gives you 40, but you just need 50 to pass the paper. Pure and simple equation. Okay. Another question which normally students they ask that what is the portion of theory and what is the portion of calculation? That's very interesting. Let me explain ATX. To be very honest with you, and I'm supposed to be honest, for dear student for theory portion in ATX, you should be mentally prepared somewhere from 60 to 65% is going to be the theory portion. It means when it comes to calc, so it's going to be 40 maximum, minimum is going to be 35 marks. So it can be seen clearly that the portion of the theory is far more than the calculation portion. But there is nothing to worry about this. Why? Because the entire theory itself actually depends on the calculation. Actually, in ATX, examiner is having the two options. Option number one, he can ask the same thing in calculation and the same thing he can ask in theory as well. And let me tell you one more thing with the surety. The drafting of ATX in entire professional paper is the most easiest drafting, to be very honest. So ATX drafting is very easy. Okay, so you should not be worried about the drafting. Your drafting skill just after a few classes it will be inshallah very good. You will be having no trouble at all inshallah. Okay. Next thing, when it comes to ATX, till to date, alhamdulillah I've got 6 positions in ATX. So far I have produced 6 position holders. So in March 21, I had 2 positions at the same time. One was from Bangladesh, another was from UAE. So having 6 positions in my ATX means you will be in safe hands when you will know yourself. Another point in my teaching which I want to highlight here is I always teach from scratch. I never assume that a student is having any previous knowledge. So we'll be starting from scratch. No matter whenever you have cleared your F6, no issue at all. Even you have not studied F6, still there is no issue at all. So you should not be facing any problem at all because I'll be teaching from scratch, thinking that students they don't have any previous knowledge relating to tax. Okay. Next thing, Finance Act, which we will be studying inshallah, that is 2021 Finance Act. Finance Act 2021 is applicable in June for June 22 attempt, September 22, December 22, and finally the March 23. So these are the relevant attempts in of Finance Act 2021. You might be thinking that we are in 2022, so why we are studying Finance Act of 2021? Basically in UK, we study 1 year older Finance Act. Okay, like we are in 2022, so we'll be studying Finance Act of 2021. Okay. Next point. Let me now give you the a very, I would say, brief overview of the syllabus. What do we have in the entire syllabus and how we are going to study that also. If I break this ATX syllabus into heads, so number one head is individuals. Individual like you and me. Number one, we'll be learning how individuals actually they pay tax in UK. A very important area, obviously, individuals. Second, extremely important area is capital gain tax, CGT. So one will be studying how individuals they pay tax, then we'll be studying CGT, capital gain tax. Third is IST, inheritance tax. IST, when it comes to IST is only relates to individuals. Obviously, companies they don't pay any IST. They do not have any concept of IST. Fourth is VAT, value added tax. And the last one is corporation tax. Okay. We do have self-assessment as well, but these are the five big heads, or you can say topics of ATX. Okay. In tax for individuals, tax for CGT, IST, VAT, and corporation tax. Next thing, we are actually starting this ATX syllabus from individuals. So we'll be studying like this. First, individuals. Okay. After individuals, we'll go for VAT. After VAT, inshallah, we'll go for CGT, IST, and at the end, we'll come to corporation tax. Obviously, self-assessment. After completion of individuals, we'll be studying self-assessment of individuals, and obviously, after completion of corporation tax, we will be studying, inshallah, self-assessment of corporation tax as well. Okay. So we are starting from individuals. As I mentioned earlier, we will start from the basic, assuming that the students don't have any previous knowledge. So let's start from individuals. I'm not starting any topic right now. I'm just giving you the little bit basic about the tax. Number one, the first question is how individuals in UK they pay tax. Repeat. What is the question? How do individuals they pay tax in UK? So you need to maintain a really good register of ATX. Okay, you have to make proper notes. So in UK, individuals they pay tax according to the tax year. Repeat. In UK, individuals they pay tax according to the tax year. We call it fiscal year also. So individuals in UK they pay tax according to tax year, fiscal year. Okay. In UK, tax year actually starts from 6th April of any year and ends at 5th April of the next year. For example, if it is 6th April 2020, it's going to end at 5th April 2021. If the tax year starts from 6th April 2021, then it's going to end at 5th April 2022. Okay. So in UK, individuals they pay tax according to the tax year, fiscal year, which starts from 6th April of any year and ends on the 5th April of the next year. Next point. Next point is what is tax? What do you mean by tax? Actually, we say tax is a source of revenue for the government. Source of revenue for the government. So what is tax? Tax is a source of revenue for the government. The objective of taking tax is actually government wants to take tax from those they are earning, so that government can spend the money for the welfare of people, and especially for those people they are not earning a really good amount. So normally the objective of tax is to take the tax from the wealthy people and spend that amount for the welfare of, for the betterment of the people. for the entire country, obviously. So this is simply tax, source of revenue for government. Okay, now as I mentioned earlier, we are starting from individuals. Now the first thing which we need to understand is what are the sources of income available for individuals. If I categorize the sources of income for individuals, so we have three big heads. One is non-saving income. Individual, they earn from non-saving incomes, they do earn from saving income as well, and finally they do get dividend income also if they have invested in the shares of XYZ company. So when it comes to individuals, we have three main sources of income. One is non-saving, another is saving, the last one is dividend income. Let me give you the few examples of non-saving, like employment income is an example of non-saving. Another example could be your trading profit. Another example could be property income. And etc. Like we do have pension income also. Pension income does fall in non-saving income. So now the question is, what do you mean by saving income? Let me tell you. Saving income, simple meaning is interest income. Repeat. The simplest meaning of saving income is interest income. Only interest income is called saving income. And dividend income is obviously dividend income. And we know that shareholder only get the dividend when they have obviously invested in any XYZ company's shares. So in easy words, you can say saving income means which is not a dividend income, which is not non-saving income. Or otherwise, simple understanding which you can develop is saving income simply means interest income. So interest income is saving income. Okay. Number one, we are discussing what are the tax rates for non-saving income. What are we discussing right now? We are just discussing what are the tax rates for non-saving income. Tax rates for non-saving income. Number one, if someone is a basic rate taxpayer, basic rate band is from £1, it goes till 37,700 and the tax rate is 20%. Second, we have a higher rate band. Higher rate band starts from 37,701, it goes till 1,50,000 and the rate is 40%. Third is additional rate. Additional rate. The additional rate is 1,50,001 plus above and the rate is 45%. We have basic rate band, higher rate, additional rate. Now, another thing. Another question is every individual in UK needs to pay tax? The answer is no. Only those individuals in UK they are required to pay tax. They have earnings more than personal allowance amount. Personal allowance, which is 12570. Repeat. In UK, only those individuals they pay tax. They have earnings. They have income more than personal allowance limit, and the personal allowance limit is 12,570. Previously, it was only 12,500. Now, in Finance Act 2021, it has become a little bit higher. Now it is 12,570. Okay. Let us apply these tax rates. How do we apply? I have a question 1. Mr. X is giving us his employment income. Let's say his employment income is 90,000, and the simple requirement is calculate income tax liability. We just need to calculate income tax liability. So let me write. First, I'm going to write non-saving because employment income is a non-saving income. We have employment income of 90,000. From this 90, you have to deduct first personal allowance, which is 12,570. Now you will get taxable income. You will get taxable income. So 90,000 minus 12570. The taxable income amount is 77,430. So actually, this Mr. X is not supposed to pay tax on 90,000. This Mr. X needs to pay tax on 77,430. So how to apply the tax rates? First, you need to write income tax. Then basic rate band, non-saving. Basic rate band limit is 37,700. Multiply this with 20%. Let me use my calculator. So it is 7,540. Now listen and listen carefully. Out of this 77,430, you have tax. Excuse me. You have tax 37,700. So we need to deduct 37,700 from 77,430. So whatever amount comes, it will fall in higher rate band because we have consumed the basic rate band. So you have to write higher rate band, non-saving. Let me use the calculator. 77,430 minus 37,700. So I'm getting 39,730. I have to take 40% of this amount, which is 15,892. So here comes your income tax liability. Here comes your income tax liability, which is 23,432. So your income tax liability is 23,432. Let's try one more question. Mr. X employment income is 80,000. This time we have pay also, which is 10,000. Pay means pay as you earn. Simply, this is the tax which Mr. X has already paid in advance. Required is income tax liability. Employment income is non-saving income. Okay. I seriously want you to pause the video and attempt this question. Then obviously after attempting the question, you can unpause the video. Personal allowance 12570. I'll get taxable income. $80,000 minus 12570. It is 67,430. So actually we need to tax 67,430. You have to write income tax here. Okay. Now basic rate band, non-saving, 37,700 into 20%. 37,700 into 20% gives us 7,540. Now higher rate band, non-saving. From 67,430, we need to deduct 37,700. whatever amount comes, it will fall in higher rate band because we have already utilized the basic rate band. So we need to deduct 37,700 from 67,430. 67,430 minus 37,700, it gives me 29,730. I have to take 40% of this. If I take 40% of this, it is 11,892. So here comes your income tax liability. It is 19,430. So this is our income tax liability. But the issue is Mr. X has already paid 10,000 in advance because this is pay as you earn. Pay. This is pay as you earn. Okay. So actually, Mr. X has already paid 10,000 in advance, which means that even though the liability is this, but since he has already paid in advance, so we need to deduct P, which is 10,000. So after deducting 10,000, we'll get 9,432. This is called income tax payable. This is called income tax payable. Okay. So if someone has paid tax in advance, so all you need is first you have to calculate income tax liability, and after calculating income tax liability, you have to deduct pay as you earn. Then you will be having income tax payable. Now, normally students they have one question when they come to this question. They normally think, what if we have income tax liability of 19,432? Okay. What if Mr. X had paid 20,000 as pay rather than 10,000? Then what would have been the scenario? So let's assume it is not happening in this question, but just for a moment, if I assume then Mr. X is having the income tax liability of 19,432, just assume for a minute that he has already paid 20,000 rather than 10. So I'll deduct pay 20. Okay. Then I'll be getting negative amount. Let me check what is the amount. It is 568. This will be tax refundable. It is no more payable because I have already paid a tax more than even my income tax liability. If I have paid the tax more than my income tax liability, so obviously the result will be tax refundable. There won't be any tax payable. So I hope I have tried to give the answer of that query, which normally comes in a student's mind. Okay. Now let's go to second source of income, which is saving income. So let us discuss what are the tax rates for saving incomes and how do we pay tax on this saving income. In case of basic rate band, which is from this till this, it is 20%. High rate band goes till 150. It is 40%. Additional rate. Additional rate. The limit is 151 plus above. Rate is 45%. So interestingly, you can see this tax rates and limits, everything is same like non-saving income. But there are some additional points which only relate to saving income. Number one, if an individual is a basic rate taxpayer, then individual gets nil rate band of £1,000. Individual gets nil rate band of £1,000. Okay. Second, if an individual is a higher rate taxpayer, then nil rate band is 500. Third, if an individual is an additional rate taxpayer, then no nil rate band. If someone is an additional rate taxpayer, then that individual does not get any nil rate band. Fourth, starting rate band for saving income is from this till this, it is 0%. Now, obviously, you will be thinking few things. Number one, how we are going to use these nil rate band, and second, when this starting rate band of saving income comes into action. Okay, so normally these are the questions which should be in your mind. Number one, how I'm going to use these nil rate band? How do I know someone is a basic rate taxpayer, high rate taxpayer, or an additional rate taxpayer? And the and when I'm going to use this starting rate band. So let me repeat. If you are thinking how we are going to use these nil rate band when this starting rate band comes into action, and you really want to know the answer of these question, then you must watch second demo lecture. Okay, you must watch the second demo lecture in which I'm going to explain all these things, inshallah. And let me tell you a few more things. What do I teach? I teach plenty of subjects, like I do teach F5, in which I have a position, alhamdulillah. F6, I've got position this as well. F7, I've got the position. F9, this time I had two batches, and out of that two, one batch got 100% result, alhamdulillah. Second batch was quite impressive also, around 82, I would say 85%. So F5, F6, F7, F9, I do teach SBR as well. Okay, then we have ATX, AFM. So in AFM, in F9, I've got world positions. In SBR, I have altogether 3 positions. There was a time, previous name of the SBR was P2, in which I had 2 consecutive positions in Pakistan, alhamdulillah. So ATX, I earlier mentioned, till today I have 6 positions in ATX, but I'm looking for more, inshallah. So simply, by telling you this, you will be in safe hands. Don't worry. And when it comes to my college, Liability School of Accountancy, so my college is, alhamdulillah, since 1st May 2009, we started this college. So simply, you are in safe hands as soon as you are going to enroll yourself. My admin number, ASA, Liability School of Accountancy. Admin number is 0333 3666 214. Okay. So if you are from outside Pakistan, Then our code is, I believe, 220092. Before that, you have to just put our code of Pakistan is 0092. So you can WhatsApp. Uh, if you have any queries, you are more than welcome. So one more thing, I'll be using my own compile book of Finance Act 2021, and when it comes to the kit, we strictly follow Kaplan kit, which I believe is far more better. It suits a lot for ATX. So you'll be having enough practice. I'll be covering each and everything. So I strongly believe you will be watching another lecture also, and plus you are going to enroll yourself as well, inshallah. So thank you very much for watching my lecture. Have a nice day.